comes to your pocketbook, it looks like, right? We've heard all the stories about this K-shaped economy and how the bottom 80% of earners are struggling. Well, when it comes to the affairs of the heart, though, it seems as though we may be fiscally blind. Consumer spending for Valentine's Day 2025 last year totaled $27.5 billion, and the average American's budget is about $189 for Valentine's Day, just under $200. It's the fifth biggest spending holiday on the calendar. Now, we're going to spend over $14.6 billion on Valentine's Day gifts, and that's not to mention 250 million roses that will be specifically purchased for that day. So, with a further $6.5 billion being spent on jewelry, where is the affordability issue then, right? My next guest will have a unique take on this, I'm sure. Please welcome into the show Ms. Rebecca Walser. Walser with management out in Tampa, Florida. Rebecca, perfect person to have on. Is this just a case of no matter what, happy wife, happy life? You got to spend the money on this one to make everything else a little bit more bearable?
Yeah, let me just say, I am a woman and I like flowers and candy. So let me just get that out of the way because now I want to give you the financial advisor answer. I mean, Scott, our debt, obviously our credit card debt reached one of the highest peaks in Q3 of 2025, $1.233 trillion. And so we are a nation, as you said, it's a bifurcated economy. We call it a K. Corporate profits are and the super elite are at the top and the rest of the country is kind of at the bottom, but not so at the bottom that they can't afford to spend almost $100 on just flowers and candy alone. So I think this is a case of even our poorest is living better, a better life than some of these developing countries. So we have to really still be so appreciative of what we have in this country. And obviously this administration is really trying to bring back a lot of re-onshoring all these things. But yeah, we are spending a lot. And the question is, are we denying ourselves or are we just putting it on the credit card? What are we doing?
Well, I mean, to your point, we did a story on this last week, which I was shocked about, but it's not, apparently it's been happening, is that because of this affordability issue, we've got now buy now, pay later when it comes to renting. So it's rent now, pay later. To me, it's amazing. If you can't afford it, you can't afford it. But now we're finding ways to get people into these places that they can't afford with this rent now, pay later, which is, to me, it's insane. But we have this attitude in this country where, if I'm going to go buy a car, I shop with my monthly payment, not what the overall price of the car is, which is insane if you ask me, but it works. So now we're talking about that even with homes. What's your monthly payment? Well, hang on a minute. What's the price of the thing I'm buying? So we find a way to extend credit to all these folks. And I guess Valentine's Day is just one of those ones you better make sure you take advantage of it or it's going to be a long year.
Or you might be a short relationship, right? This buy now, pay later, obviously.
Right, exactly.
But the buy now, pay later, it really got its mark. Christmas shopping. Hey, we're checking out airfares, really high stuff. Oh, hey, we're going to finance it for you. Just make these 4 equal payments. So, okay, that's for a purchase, a discretionary purchase. When you're talking about shelter costs, Scott, shelter costs that are actually built into your actual monthly nut, if you can't afford that, perhaps we're going too far by actually financing rent. The 50-year mortgage was one idea that exactly that, around the payment, Scott, to get the payment as low as possible so people could afford it. No one really bought at the 50-year mortgage, but it's really a result, if you think about it, of the fact that we had next to zero. We have 25 basis points Fed funds rate from 2009 all the way until we started raising rates because of the pandemic. So that was just such a long extended period of time that people got used to basically almost really low interest rate car financing, house financing. Home prices expanded because instead, for the $3,000-4,000 you could afford monthly, now you're buying a $600,000 house because the interest rate's so low instead of a $300,000 house. And so we have just gotten, Scott, used to cheap credit. And now these companies are coming in to figure out how can we keep this going even though interest rates have more normalized. We're looking at these interest rates like they're outrageous. These are normalized interest rates. A mortgage in the 6%, 5% range, that's considered
true.
Low historically.
Right. You're absolutely right. And with the 3.5 to 3.75 Fed funds rate, That's average to low. I mean, we're not sitting in a high interest rate environment. And I gotta say, this is an interesting one because, having worked around the world and a lot of times in Europe, you just mentioned that low interest rate period, zero to low, basically. We had a 0.25% Fed funds rate for a long time there. And so basically, I'm going to call that free money. But there was a time, there's only one country that I saw push the boat out and really take advantage of it in a small way. And I wish I knew who their finance minister was at the time. But Ireland, when interest rates were basically zero, they floated a 1% 100-year bond. And they got filled in immediately because that was such a great return compared to what the going rate was. So whomever their finance minister was came up with a great idea that I'm going to float something where we can borrow for 100 years, 1%. And I thought it was a fantastic idea. But that's the only one I ever heard of. The rest of the world is, falling over each other to go into further and further debt. So interesting stuff out there. And you're exactly right. It's got a lot to do with this economy. And I'm afraid that go ahead, real quick. We got about 20 seconds.
I was just going to say, with Trump's appointment of Walsh, he is more hawkish. I think he's going to move more to traditionalism. And I think the modern monetary theory that we've really lived under since 2009 Obama years is going to be challenged. Even though Trump wants expansive economies and low interest rates for consumers, I do think that who he nominated is going to challenge the expansive budgets and balance sheets and low interest rate environment. So people need to start getting used to paying more. It's just what we have to do now.
Yeah, well, I'm tell you what, maybe we'll bring that up in the next show. Modern Monetary Theory, MMT. That's a good one for folks to learn about. Okay. Yep. Great stuff as usual, Rebecca. Thanks for coming on. Great to have you back. I'm glad you didn't break a leg skiing. It looked like it was a lot of fun. Rebecca Walser.
Me too.
Walser with Management down in Tampa.